Good evening. This is Doc Severson for the TheoTrade report for Monday, April 17th. I'm going to start out tonight's report on the S&P 500 here. And with about 30 minutes left to go, it appears that we've got a nice little rally underway. We're up about 18 points right now. And this is off of the very negative conditions that we had last Thursday, right before the extended weekend, when nobody was sure who was going to be bombing whom, things like that. And this is why a little bit of risk was taken off the table on Thursday, but honestly, not very much was. Again, keep in mind that the S&Ps are still within about 50 points of all-time highs, and this is all that it's done. Even pulling back to 2,300 would just be a 4% haircut. We haven't even gotten that far. And so right now, it does look like the S&Ps are going to want to try to retest this trend line, perhaps break out from this triangle consolidation here. And we can start to see this formation here, which is, again, this is a very mild, very easygoing pullback so far. This is not anywhere near what it could have been. So the thing that intrigues me here is that what's going to happen if that does occur. So let's look forward on this. What happens if this does try to break out and make a higher high from here? We've got just about enough energy for that to occur on the daily chart. The weekly chart is getting there fast to be able to support this. Again, if you understand chart patterns, this looks just like a typical little flag pattern. Very tight, high and tight little pattern here. The problem and the elephant in the room is really the monthly chart. The monthly chart says that, no, this thing can't break out yet. So the monthly chart is telling me that any rally to the upside is going to be doomed before it does hit 2,400. Now, anything can happen in the market. This thing can break out and zoom straight up to 2,600 for all I know, right? But all we're looking at is the probabilities that when we have monthly swings that go this far, this quickly, then typically we have had a fairly serious reaction to that. Anytime we've had this type of movement, we've had a fairly serious reaction to that. Now, the exception to this rule has been 2013. This is kind of the X factor. But again, you got to remember 2013 was, hey, you got the Fed downstairs in the basement, running the printing presses all night long. Okay, they're no longer doing that. Now, the only thing that we don't know is how much of this, or I should say this here, is due to the 0% interest rates around the world, which are basically still punishing people for keeping cash in the bank. So to me, the highest probability move in the near term is an attempted breakout to the upside here, perhaps based on some earnings. I'll talk about that in just a minute here. But an attempted breakout to the upside, and then that move gets sold into and creates another lower high and finishes off the consolidation here, because we are just not finished yet. We're just not finished consolidating. So any move to the upside, I think, is going to be premature and create a selling environment into there, a selling opportunity. Now, once again, with the VIX futures, we have just utter complacency coming on board once again, is that all of the fears that we had going into the end of last week are just simply being erased right now. Now, this doesn't necessarily mean anything in the bigger picture, again, because what I talked about last week is that when we've had these big reactions, again, this is sort of a stealth move that starts with the volatility futures well ahead of when the actual move comes. Stealth move starts out well ahead of the actual move. Stealth move way ahead of the actual move, right? So this is just part of the, the initial act of what's going on here. Is, again, when you put all the evidence together, short term, perhaps we do try to break out. And it's probably going to be on the back of some decent earnings. We got a number of them coming up this week alone. And then that could drive this thing to try to break out prematurely and then get hauled underwater again, finish off the consolidation. Okay, let's see what's going to be moving the markets in the next couple of days. Really, tonight, the big one is going to be Netflix here. So Netflix is reporting aftermarket tonight. By the time you get this report, This should be available. United Airlines is reporting tonight. Be interesting to see how they do, although it says nothing to do with the recent incident. So some of the bigger ones that are coming out this week is on Tuesday. We have Goldman Sachs, we have IBM, Johnson & Johnson is coming out before the market. And then Schwab is also coming out before market. And finally, Yahoo is actually coming out after market. So that's Tuesday. Wednesday is shaping up. And we have American Express. That's going to be a market mover. And Morgan Stanley is coming out before market. And those are the big ones for Wednesday. Let's look at Thursday. Thursday's a huge day with 129 companies reporting that day. You know, maybe I went through the list a little too fast, but the only big one that I see on Thursday is actually Verizon. So Verizon's reporting on Thursday, and then we wrap up on Friday with another 42 companies reporting. We have GE reporting as always on the Friday. The next one I see of significance is Schlumberger. So a lot of big companies reporting this week. This should push the market around. Again, if they all come out above estimates, we could have a positive push higher. I think that could potentially drive this thing to break out. Again, a failed breakout could be in the cards from that. So again, the market is acting today like nothing happened over the weekend. All the risk is gone. Everything we know about anyway. So it's going to focus more on earnings going forward this week, of course, unless something else happens. So we'll see where the market wants to go from here, and we'll see what kind of an edge we can build off of that. Thanks for listening, folks.